Diversification. It's not just a buzzword. In fact, it's a proven strategy that could seriously grow your wealth. But how does it work exactly? Well, in this video, we're gonna get straight to the point about how diversifying your portfolio is key to securing your wealth. So first and foremost, what is diversification? We hear this word all the time, but what is it really? Diversification, if you use the traditional phrase, people will say it's not putting all your eggs in one basket, right? It's being able to have your money in different places at the same time. Now, the question is, are people really diversified? Well, that's something that we really want to dive into today. So make sure you stay till the end because I'm going to talk about how you can really start to diversify between these. But I'll tell you, diversification, really what we're trying to do here is we want to be able to get your money in different places so that you don't risk it all. You don't lose it all. Because here's the truth. No matter how good of an investor you are, there will be losses. Even in the real estate game, and I know some of these real estate guys won't want me to say this, but even in the real estate game, you could lose money. Now, is it less risky than a lot of other things you could do like in crypto or in stocks and things like that? Of course it is. But there's seriously nothing that's 100% guaranteed other really death and taxes and lately inflation, right? And even then, maybe it's not totally guaranteed. And so we want to make sure that we got our money in different places, but if something does go wrong, you don't lose it all, right? This is one of the worst things I see happen all the time, especially those that have very little savings to start with. Maybe they have just $10,000 or $20,000 and they say, all right, this is the most I've had in years. This is awesome. What do I do with it? I want to make money with this. Listen, one of the best things you could do is not try to just throw it into some investment because most investments will require you to put at least that much in. And many people, when they do that, they just go all or nothing. They put all their chips on the table, they put it all in, and then of course, if it doesn't go well, which often is the case because they usually don't know what they're doing with investing. By the way, key point, keep watching this channel, ding. But you want to make sure that you don't put everything in so you don't lose everything in that one deal. That's why people have this rubber band effect with their money. It grows and then it shrinks, and it grows and it shrinks. You want it to keep growing throughout time, regardless if there's losses or not. Now, here's a key debatable point I know that some of you may not like. And the question is this, are mutual funds really diversified? My answer is no, absolutely not. Mutual funds are not diversified at all. How do we know this? Well, the thing is that if you look at the last recession, the big financial, the Great Recession, we look at that back in around 2008. We also look even in 2022. What's fascinating is that people always told you in mutual funds that the way to diversify is not just have it in equities, as they call it, or stocks, but also having things like bonds. And usually they put very little percentage. I've noticed over the last decade, and even just financial experts have gone very aggressive, saying, you know what, just put it all in. Put it all into those equities. In fact, put it into international stocks. So you're investing in China, which by the way has been tanking like crazy over the last year. You don't want to have your money put in all those same places. But they'll say, well, listen, you're diversified because not only are you putting in different places in the stock market, but mutual funds, well, they diversify among many stocks. Here's the myth with that, is that you're not really diversified. Because what are the different asset classes of diversification? Well, one of those asset classes is called paper assets. All of these, bonds, stocks, mutual funds, they're all paper assets. So you're in one class of investments and that's it. So even though, yes, you might be in multiple stocks, what happens, just like in 2022, is that stocks went down. And not only did stocks go down, guess what? Bonds went down as well. Even though they're supposed to be the safe place to store your money, everything lost money. I saw this happen in the recession prior to that. We saw this happen in 2008. Everything went down. It didn't matter what you did. You lost money. No matter how conservative you were, you lost. Unless you had your money in like a money market or something like that. But for the most part, if you were in anything like stocks or bonds, you lost money. And that's the problem, guys. That is not diversification. That's what many financial advisors will teach you to be diversified, but that's only diversified among the products they offer you. Notice that financial advisors, by the way, call these products. I think that's interesting, isn't it? It's almost like they're salespeople. Hint, they are salespeople. So what I'm saying is this, guys, you are not diversified if you're in mutual funds. So here are the different asset classes you should be in, or at least over time eventually get into. Number one, we mentioned paper assets. Now this is not just stocks and bonds. This is anything dealing with something that is a form of paper or contract, right? So stocks and bonds are the easy ones, but we also have options. You can trade options in the stock market, much riskier, but those are also paper assets. Even when you buy this, get this, and this is a debatable one for people too, are REITs, as in R-E-I-T. REITs, real estate investment trusts. People will say, well, that's how I invest in real estate, and it's with my money in the market. Let me just make this clear. REITs are not real estate. Even though they're they have real estate assets as part of that portfolio, it's not really real estate. It's not like you can just say, oh, I'm gonna sell off a property inside this thing. Nope, it is managed by money managers. And here's the truth, guys. We saw this happen, especially in 2021 and 2022. Many money managers that did real estate investment trusts, when they bought real estate, they bought crappy properties. In many cases, they bought way over appraised value. Why? Because you were throwing so much cash at them, they didn't know what to do with it. They had to invest it. They couldn't just let it hold in cash. They get in trouble. They get fired. So what do? They go buy properties that may not be great. So just be warned that when you buy a real estate investment trust, that's not a real estate category. That is a paper asset. Even life insurance, we talk about infinite banking, that is also a paper asset. Savings accounts, CDs, money markets, all paper assets. And even annuities, paper assets. So almost anything a financial advisor will offer you or a bank will offer you is a paper asset. Is that bad? No. But what I find so often is that almost everybody is heavily into paper assets. Almost, in some cases, sometimes 100% of their money is all paper assets. That means you're not diversified. So there's 3 other classes besides paper assets. There's real estate, I just mentioned that. Real estate, again, is investing in the real property. Okay, it's not just like investing in a note. That's going back to paper asset. Even if there's a property to back it up, and that's better, still a note is a paper asset. The property itself is real estate. So if you own a commercial building, maybe you own an apartment, maybe you own a duplex, maybe you own a building that businesses rent from you, maybe it's just a single family residence. Those are all real estate. Okay, so there's lots of real estate classes. Now some people say, well, we can't be diversified there. Just so you know, just like in paper assets, there's a lot of options there too. Did you know you can buy, and there can be raw land involved? That's another option. It can actually be things like self-storage. You can do things like that. There are so many ways to invest. Even warehouses. People are realizing that warehouses are great, especially as the Amazon Prime businesses are growing. There are a lot of ways to invest in real estate. So that's the second class. Third one is commodities. Right? Commodities are things like oil and gas, of course, gold, silver, copper, platinum, heck, even corn, or oranges, like if you're going back to Trading Places, if you remember that movie from the 80s with Dan Aykroyd and Eddie Murphy, hey, they were trading commodities, right? They were commodities they were dealing with. Now, granted, sometimes they're dealing with papers, but commodities are dealing with the actual thing. Now, I believe that if you're investing in commodities, it's actually investing in those things, right? You actually have ownership in those kind of assets. But that's another thing you can really diversify into. Many people talk about gold and silver. That's not a bad thing to have. I will say this, is that often gold and silver won't pay cash flow. So as you start to diversify, and I'll kind of get you into this a little bit here, just know that you're going to diversify in stages, okay? And then the fourth asset class is business. Now, if you're a business owner, invest in business, I think is a great way to go. My personal 2 favorite out of the 4 are business and real estate. I love those 2. I still use paper assets. I still have commodities. I have all 4, but I love business because business is something I can control. And if you've seen my other videos where I talk about how to do wise investing, business can be one of those ways. Understand that Warren Buffett is not a paper asset kind of guy. People say, oh, he buys and sells stocks. No, he doesn't. He buys businesses. He buys majority shares in businesses so that he can go in, be on the board of advisors, if not be the controlling interest investor in that company, so that he can secure his investment. Warren Buffett is different than anybody who tries to buy stocks and options. He doesn't do that stuff. He doesn't play that game. He buys businesses. He invests in those. And that's a great way you can make money. Heck, look at the Fortune 500 list. What's in common? They all own businesses, right? They all own businesses of some sort. So how do you diversify between these? This is really, it depends on you. One is go to the asset class you know best. Now, for many of you, maybe paper assets, you might have to diversify away from them. So it might mean you might want to go more into real estate. I think real estate's a great safe place to go, especially if you're looking to have some control over your money, especially if you're in paper assets. Look at doing real estate, but make sure you're doing it right. Also, business can be good, but not everybody's about business. That can be something you add later. Commodities, if you add them in, like I mentioned, don't put a ton of money into commodities in the beginning. Once you get to the point where you have enough passive income coming in to pay all your bills and then some, and you're looking to now build wealth, then you can start adding in higher percentage of commodities. But I'll tell you, for me personally, like what I tell a lot of my clients is, if you're looking to buy things like gold and silver, don't make it more than about 5% of your total portfolio in the meantime, and maybe even less while you're starting out. So that's what I think you should be doing, guys. It's like, definitely if you have a business, great, invest in that, but make sure you also diversify in real estate, have paper assets, and then eventually start phasing in commodities too. That is one of the great ways to do it. I'd love to hear, what are your favorite asset classes? Put that in the comments below, and then check out this next series called Make You Rich. I think you're gonna love it, so check it out.